Hi, this is Shane with The Rational Trader. It is end of July, and it's been a while since we had a video out. We've been collecting data through live trading, and what I've been doing is trading multiple markets and taking a very conservative approach with a few number of trades per day, and not terribly happy with the result. Basically, you catch a nice trade now and again, but for the most part, you're just kind of treading water over time. And what I wanted to do here was give the members more choice in how they choose what, sort of how much risk they're willing to take and how many trades they want to go after. All right, but so what we're going to do is we're going to end up going through this spreadsheet, which kind of shows the trade-offs between different approaches. But to do that, we really need to revisit sort of how we go about choosing which behaviors we want to trade in each market, and then we'll talk about the change that I made that allows a little bit more visibility into what your different choices are. So instead of just accepting my level, the level of risk that I'm comfortable with, and the number of trades per day that I'm willing to do, you have the ability to make some informed decisions. This is particularly true for cases where if you're not trading multiple markets, if you're trading only a single market, then you'd probably like to be taking more trades per day than I have been trading multiple markets. All right, so with that in mind, let's take a look at what we're doing here. So the basic idea here is that we train the model, we train the machine learning system on data only up to some time in the past. In this case, it's through the end of March, right here, through 3/29. Right, and then what we do is we take that model and we apply it against all of the trading that's occurred since then, and we tell it, okay, what would you predict? What would you say we should do? All right, so this is what this red box is. We're gonna run a simulation for each market. What would you, as the model with data, 2 years of data trained through end of March, what would you choose to do? And then what we're going to do is we're going to analyze that data. Okay, so based upon your predictions, Mr. Machine Learning System, what was the output? And what we're looking for is the high quality trades or the high quality behaviors that we see in that market. And the way that we do that is we break this period of time, which in this case it's from March 30th through July 26th. We break it up into these buckets, okay? And in each bucket we combine all the outputs, and we're looking for just the high quality trades, just the ones that have a high trade quality. And then we're saying, okay, these are the trades that showed up with good quality. Good quality means the fewest number of trades with the most profitability. Okay, so I actually call that the efficiency ratio, or the ER. But really what it is it's just profit in ticks divided by number of trades. All right, so if you have 50 ticks of profit and you took 10 trades, then it's 50 divided by 10. It's an ER of 5. We want that number pretty high. We want that number. I want the number around 10 or higher. And really, what it means is, based upon the simulation, I got this number of ticks per trade in profit. All right, so you can see why we care about this. You may have a case where you have a large, a high profit amount, but it took, a lot of trades to get that, and you end up just getting eaten alive by commissions. Okay. The other factor is that we're dealing with an uncertain environment. We're dealing with probabilities, and so if you think about other things that are probabilistic in nature, like flipping a coin. You can flip a coin, which is it has a 50% probability of turning up heads, right? And you can get long stretches flipping that coin over and over and over again, where you can get long stretches where you get only tails, or a bunch of tails and a few heads. Okay, so what as traders, what we want to do is we need to manage our risk. So a losing trade is losing money, and so we can't lose too much, and then we're out of the game, right? We need to make sure we're in the game for when that nice trade comes along. All right, so because we're dealing with a probabilistic environment, we want to give ourselves the best chance to still be in the game, to have that participate in that good trade. Okay, so this is what we're doing here, is that we're analyzing. Show me all the high quality trades that appeared in each of these buckets. All right, so I break it up into X number of buckets, and then look at it by bucket. And what we do then is maybe there's 4 or 5 behaviors that really stand out as a good trade to look for in that market. Then what we do is we're in a simulation with just those codes. There's this purple box here, just those codes, and see what the result is. Okay, now this is really key, because I may have a behavior that shows up that just works really well in 1 or 2 of these time periods, but then just does nothing but take a loss every other time you see it. And so what will happen is the output of this purple box here will show you, all right, that may have been a good trade individually sometimes, but when you put them all together, it's not that great. It's not that great a result. Okay, so what we end up with is we do an analysis here that says you must be this good to show up. You must be X good to show up in my set of codes I'm gonna try against. And then once I simulate, here's the output. Here's how good you are. You actually are. All right. So we do that for we analyze every individual trade, every individual behavior, and then we collect the high quality behaviors and we use them as a set, and we run that set simulated against the same set of data, and then we see, okay, well, what's the actual result? So we're going to get sort of a system quality number, which is really the same thing. It's just it's the efficiency ratio again. It's just what was the profit in ticks versus the number of trades I ended up taking. So, for example, let's say I had code number 101 that really shined in 2 of these buckets. I don't necessarily know or even care which 2. All right. So code number 101 made 100 ticks across 2 trades. So that's an ER of 50. That's really good. 100 ticks divided by 2 trades is 50. So it only took me 2 trades to make 100 ticks. But if that trade shows up, that behavior shows up in these other 4 buckets, 8 more times, and it's losing money, then my total number of trades is now 10, and then my profitability was 100 ticks minus the losses. In this case, those are 7 tick stop loss. So it's 7 times 8, 56. So your overall profitability dropped to 44 across 10 trades. So it's really 4.4 is the actual efficiency ratio for that trade. So it's really high. I've seen it really hit and do well. But when you look at it all the time, it doesn't do so well. Okay, so it goes from this awesome, wow, 50 tick efficiency ratio or 50 ER all the way down to 4. Okay, so that's what we're looking for here. And so based upon that, we're going to choose codes and then apply those to live trading. So let's look at the spreadsheet now, and I'll give you a sense for sort of how it all plays out. This is a spreadsheet that you'll receive as a member in the weekly message. And And down here are tabs for each of the different markets. So CLGC, the euro during the U.S. session and during the London session, and then the yen. All right, so we're looking at CL here, and the way that this column here is formatted is it shows the results of these different sets of codes using different criteria for the quality of the trade. So let's go back to here for a moment. So this thing here, trade quality, I adjust. I basically run every version. I have the computer automatically run. I require super high quality too. I require not so great quality. It's actually it's the same value of trade profitability divided by trade, so it's the same ER value. And we go from 10 to 50. Okay, and so what I do is I run this simulation analysis and then resimulation of the sets of codes using different trade qualities as the variable that's changing. So I'll run it for an ER of 10, 20, 30, 40, 50, all the way up to 50. So, and then let's see what the results are. So if we go back to here, I've done that. This is for CL, and I've sorted the results by ER. So what was the best ER I got? So this line here says, actually it would be easier if I broke out these 4 columns. So this isn't necessarily formatted very prettily for humans to look at. Let me break out. It's these first 4 values that are important. Give me just one moment. All right, so what I've done here is I've taken these 4 columns here and I've broken them out so that we can look at them individually. All right, and that's what this is here. And so there's threshold, profit in ticks, the ER, which is the profit divided by trades of the simulation, and then what was the trades per day. All right, and so what you can see, this is oil for the simulation run from March 30th through July 26th, and you can see there's 84 days there. I broke it up into 4 buckets, and then using each of those buckets, I said, all right, only show me trades behaviors that yielded at least a 44 ER in one of the buckets, and I did that for all all threshold values for from 10 to 50. All right, and the top ones, and then I sorted the result by efficiency ratio. So you can see there's a clump here from 44 to 49 where the ER is 12.11. So what that means is that for that set of codes, whatever it happened to be, you average 12 ticks per trade, right? So the total profit was 218 ticks. So in oil, that's $2,180. Averaging 0.21 trades per day. That's 1 trade a week. Okay. The next level down, if you look at the next group, remember this is sorted by ER here. It's sorted by this column here. All right. The next group here, let me color this so to make it easier to see here. So we'll just make it gray. So the next group is right here, where there was 27, 28, and 29. The requirement yielded an ending ER of 9.84. So again, what this means is that I had a set of behaviors that showed up in one of the buckets, or 2 of the buckets, actually frequency one of the buckets, that had a really high efficiency ratio, so a really good ratio of profitability to the number of trades. All right. But when I apply that set of codes across the entire simulation, across the entire time frame, it yields 9.84. So that means 9.8 ticks per trade. I want this number at 10 or higher, or at least near 10 is what I want. All right, and that actually made more money. Okay, so this would be a candidate here. My ER is really high. The profitability is decent. Okay, so let's make this a green color. Because or actually, let's make it yellow since it's a candidate. Okay, of the set of codes that I want to use. All right. Now the next group is, not that much different in terms of ER, and it makes less money. Okay, so obviously I'm gonna stick with this. Now what I'm doing here is I'm going through my thought process so that you can decide which factors are important to you. One thing I didn't mention was that this is 0.45 trades per day, so just under a half a trade per day, or about 2.5 trades per week. Okay. Now, when I look at this number, this ER number, a good way to think about it is, because we're dealing with probabilities, because we're dealing with uncertainties, because we're trying to predict the future, your assumption shouldn't be that, oh yeah, I'm now going to make 9.84 ticks per trade every time I take a trade, because this is a cumulative number across 84 trading days. All right, and remember, you can flip the coin and get a long stretches of tails. All right, and so when I look at that, I just cut the number in half, and then I ask myself, is that worth it to me? Is that worth trading to me? So it's close to 10, five ticks per trade. My costs are going to be 1 tick per trade. In oil, it's $10 a tick, so that'll cover commissions. So okay, it's worth it to me, but lower than that, not so much. Okay, so it's something to think about. You have to make your own. You're gonna make your own decisions. You can see that in this particular case, as we, our next group down is 9.74. It was a group from 30 to 35. This was the opening. I required. I must see at least a 30 ER in one of these buckets. It ends at 9.74. There's a little bit of a theme here about your ending ER is about 1/3 the opening requirement. That's an interesting piece of data there. This is slightly less trades per day than the one above. The next one down is worth looking at. This is these are all in the close to 10 here, but the number of trades is dropping here for this group. Right now, that may be something that you're interested in if you're trading multiple markets. You want to keep the number of trades per day per market down so that your overall total number of trades per day is manageable. Keeping in mind that you can, as the coin flips, as the probabilities unfold, you may find yourself on the wrong end of one of those days where everything's coming up tails. Okay. Now this data is also sorted by profitability. If you just scroll down. Okay. In fact, let's do it this way. So a quick way to kind of understand, is my candidate okay, is to flip it and look real quick. So 374 is the profitability here. Well, what was, if I sorted this data by profitability, what was the best I could do, right? And where does this sit in that ranking? All right, so if we do that, if we look here, 374 is right there. So there's only 1, 2, 3, 4. There's like 5 categories above me. Okay, but look at the, let's make this yellow so it, that's our candidate set of codes. But look at the ER here. Okay, so we're going from 9.84. This says, oh wow, look, I can make 100 ticks more. But look at the ER. It's 2.57. So only 2.5 ticks per trade. So the gross number looks really enticing. It looks really tempting, but you have to take a lot of trades to get there. All right, and so the broker's going to love you. All right, it's 2.24 trades per day, which is way too much in my book. Anything over 1 is a problem. So you have to watch out for that. Don't let that number deceive you into thinking, oh yes, this is what I want. I want the highest profitability, because it's not. The net number is going to be much less than that because you got to take so many trades. Remember, this ER is basically ticks per trade. All All right. So if you wanted to like go for profitability over all else, the next one down would be what you'd be interested in. So the set of codes that use this 24 as a threshold, all right, that gave you 6.43 as an ER on 0.8 trades per day. So about 4 trades per week is what that averages out to. All right. For me personally, I'm concerned about too high a number of trades per day since I'm trading multiple markets. So when I look at this, the only other one that looks interesting would be that one. It's 5 ticks more. My ER drops a fair amount. It drops all the way down to 9.02. It's a slightly more trades per day. If you look at the codes, you can see what's happening there. So let's do that. Let's jump over and look at that real quick. So this is rows 61 to 64. This is the CL data. It's this here. All right. So you can see this is the first bracket here. You know, this group here. I should do it like this one. This group here. This is the long codes and this is the short codes. And you can see the difference between these two is that when you required 27 as your minimum quality level, this 122 code dropped. It didn't meet the criteria. It dropped off. All right, and you can see the result of that in the profitability. So you made 5 ticks more, but you gave up a lot in terms of your efficiency ratio. So overall, it was profitable, but not by very much. And you took a lot more trades to get it, basically. All right. So when I look at this, I'm comfortable with that set of codes right there. So my candidate of yellow, I'm going to switch to green. All right. So in the spreadsheet that your members get, you'll see a green highlight. You'll also see some yellow highlights, which were other candidates that I looked at. All right. So now, with this in mind, let's look at the other markets and see sort of how I look at it. Keeping in mind that if I'm going to trade multiple markets, 4 markets here, I've got one market already where I'm at 0.45 trades per day, a little on the high side compared to what I've been doing. Now maybe I need to do that because, like I said at the very beginning of the video, not terribly happy with just the occasional good trade that you get. Never really taking any losses, never having any really nasty days, but lots of days where kind of just nothing shows up. So let's look at gold next. Oil and gold are the ones with the most movement. So looking at it by ER, you can see there's a group here that's 12.71 overall ER, so 12 ticks per trade. The profitability is 178, so that's a number. That's not a good number or a bad number. It's just a number to compare to. If we go down to the next group, all right, it's basically right here, and the profitability jumps up almost 50 ticks to 237. The ER is still above 10, which is still very good in my book, and the trades per day is 0.26, and this is kind of important to me. I don't like lots of trades per day because you just end up churning. The broker's going to love you, but you may find that you're just spending a lot of money in commissions not to get anywhere. All right, so other choices here in gold. So let's do the same thing. I kind of like what I see here. 9.2 for less, so I'm not going to do that. That doesn't make any sense. So 175 if I use this set of codes, as opposed to 237 at a higher quality, and that's an obvious choice. All right, here's 224, so that's close to that on a lower efficiency rating, slightly more trades per day. That's not. I've got no interest there. 262, so this is more now. 262 more than 237. My ER dropped almost in half, so and the number of trades went up. It doubled. So I'm not at all interested in this. So I've gone down far enough. Let's take a look at where does 237 sit in the overall ranking for profitability. Let's go down to here. 237 is here. It's pretty far down the list. Okay, so let's look at what else we have. The next group up is half the ER. So, you know, one way to think about that is this is about the same amount of profit, 237 versus 244, but the ER is cut in half, which means you took twice as many trades to make that amount. So it's absolutely not worth it to me. It's pretty obvious. Same thing. This is all very similar. 237, 244, 262. ER is 5, 5, 5. Up here, here you make more. Okay, the ER drops to 5.22. It's still you're taking a lot of trades to make 20% more, 30% more, 30% more. All right, so if 0.69 trades per day versus 0.26, so this may be a reasonable candidate here if you're only trading gold. All right, or whereas for me, I already don't like it because I don't like the ER that low, and the number of trades per day is too high if I want to trade multiple markets. It might be worth doing if I was only going to do like gold and oil, and then it might be okay. But if I'm going to throw the yen and the euro in, then I want to be careful there. This is slightly more. The ER just is in the floor now, so this is not at all anywhere nearly acceptable to me. 3.47 is too low. 4.7, 4.7, 4.8. You know, the highest number again at 3.4 ER. So you can be tempted by that number. You know, that's gold. That's $4,420. But you're only making 3.4 ticks per trade because you're taking so many trades to get there. All right, so the best balance here for me, it seems pretty obvious where the cutoff is. It's right there. Okay, so my candidate here is going to be the final. So let's change this to green. And now we'll do the same for 6E. Oops, I didn't do that. We'll do the same for 6E. And 6J and 6L. Now the thing about these other markets is there's a lot less movement in the euro and the yen and the euro London session. And this is the euro US session, and you can see the best ER. This is sort of descending on every year. The best ER is 6.1. It's nowhere near close enough what I'm willing to do. The only reason to consider it is that the trades per day is low enough that I'm never going to get really hurt at 0.37. That's like 1.5 trades per week. At 0.2 would be one trade per week, right? 1 is 1 trade per day. So I would consider this. You can see what happens is that at 37. Is the threshold, and then they all just the same all the way to the end. So let's put that as yellow. What else do we have here? More for a lower ER, slightly more trades per day. 173 less, 296. Okay, let's look at that one and that one, 450. So both of these, I think that you're in trouble here. 296 is quite a bit more, right? You know, almost 100 ticks more than my candidate set of codes. But the ER is 30% less. It's already not very good at 6.1. I want that near 10. And so now you're down at below 4. This one looks really tempting. Oh my gosh, 450. Same thing. Let's go look at where does 189 fit in the larger scheme of things here. It's here we are sorted by profit. So here's 189s down here. There's a group. There's a 216 level, 258, 283. There's a whole bunch of choices here, but I'm not happy with any of these in terms of how they behave overall. Right, the ERs are just too low. These are all below 4. These are below 3. The trades per day is really high, so you're going to take a lot of trades to not actually make very much, right? So it's, again, that's what that says is my gross is 450 ticks times whatever it is, 6.25. But I'm only making 3.75 ticks per trade. All right, so it's for a market like with a lower dollar per tick, it's even worse, right? Because you need more ticks to pay for the commissions. So I'm not happy at all really with what I see here in the euro. Certainly, I wouldn't choose any of these up here above the candidate one that I have. If I look lower here, I'm making less on more trades per day, so none of them are look more enticing than what I've chosen here. Even here, I would question whether whether I want to do that or not. The only reason I would consider it is that because 6.1 is just not, to me, that's just not good enough. This market, there's just not enough movement in this market right now to make it worth trading. The only reason I consider it is 0.37. So it's really not that many trades per day. So you're never gonna really get in like big trouble, or rather your expectation is you're not gonna get into big trouble because you're really just not taking that many trades. At 0.37, that's 1.5 trades per week. So I would consider. I'm going to leave that yellow. I'd consider it. I don't know that I would actually. I'm willing to actually trade it live. The yen. You have a group here with a 20 ER. Profit is 60. Now 60 is the target in our simulation. So what that means is you had this code, this 221 long. You had one trade or three trades actually. One trade that hit it, right? It hit the target, and then two that scratched. But look at the trades per day. It's 0.04. It's basically you're never taking a trade across 84 trading days. So this is just not enough trades. Go down to the next one. Profit goes up to 89 ticks on 14, and the next one down is 155 on 12. That looks okay to me. 0.14 is still not very many trades per day. Again, not just not a lot of movement, but the movement that is here is higher quality than the euro movement, right? So this would be a candidate here. An ER of 12.9. That's not very many trades per day. 0.14. That's almost like 1.5 trades every 2 weeks. So you're not seeing much. So for a multi-market, that's perfectly fine. You can jump up to 212 here on 1/3 trades per day with a lower ER. Okay, so if you're trading only the yen, this would be something to consider. It's not enticing to me because the ER is dropping so much. If I'm going to trade multiple markets, then I'd much rather have a high ER with low trades per day, and then look for the good quality trade. In whatever market it is giving it to me. So let's do the same thing. Let's take our 155 here and look at it by profit. See where do we rank? Pretty low. There's a lot of levels above us. Let's take a look at them. Curiously, that one. Okay, so I didn't mark it here. I'm sorry. It was that one. Yeah. So curiously, the top profit is at 6.41, so not great. It's half of this 155. The trades per day is 0.4. So if you were only trading the yen, that seems reasonable to me. It's not the greatest because the yen is also a lower dollar per tick, so it takes more ticks to pay for your commissions. Obviously, I would not consider these at all. This would be another choice. I actually like this one better. In fact, I like this one here even better. All right, so 212 at 1/3 trades per day, 7.31. So this is a higher up of all the ones above our candidate here. Of all of these, this is the highest ER with still a low trades per day. So, and in fact, again, because it's 0.35, I'd actually consider doing that. All right, though I like, I actually don't like 0.14 is so low. You know, it's a trade every couple of weeks, basically 1.5 trades per 2 weeks. I'd probably consider that more. All right. So let's make that. So that's the 7.31. Not terribly happy with it because it's 7.31. So that's this one right here. The reason that I'm willing to do it is it's not very many trades per day. So again, you're not going to get killed by churn. And the thing that my simulation does not cover is when you do ads, and so whereas I have that capability built into the auto trader. So in the yen in particular, you see these cases where it starts to move and then it just keeps on going, and so I'd be willing to do this lower quality. Because of that, I can get ads into these moves on the yen and actually do quite well. That's the thing to consider. Another factor here to think about is I personally favor these cases where the longs and the shorts are balanced. So there's 4 longs and 5 shorts. That's pretty balanced. I don't like these cases where there's let's see, do we have a case here? No, not really. This one's not quite as balanced. You only have 1 long and 3 shorts. These are one long behavior and 3 short behaviors. So just I like this much better, just with that in mind. So again, I think that my choice is here because it's a lower number of trades per day, and the yen historically I've seen cases where it gets into a move and just keeps going. So I'd be willing to do that. Otherwise, I'd drop to that one. All right. 6L, this is the Euro overnight session. You can see, here's a profit of 51 with an ER of 25.5. So what that means is one trade hit the target of 50 ticks, and he had another one that scratched for 1 tick. So you get 25.5, and this it happens to be just this one code, 221 long. This is clearly not enough trades to bother doing it. You can get to 89 ticks on 9.89 for 1 trade every couple of weeks. Okay, that's 1 long and 1 short. Again, not enough movement to give us a lot to work with here. Your next step is a higher profit on 8.5. We're starting to get further away from 10, as my 10 is kind of a number I have in my head of what's worth doing. So for the overnight session for the euro, I have not even been trading it at all because I didn't have as good information as I have here. I was picking individual 20, 30, 40 thresholds here, and then just not finding anything that I liked. I'll probably do this here. Again, at 0.1 trades per day, I'm never going to really get in trouble. And the euro's the same thing, is that you can get into these moves and do okay. So at 0.11, I'm never gonna. It's never gonna take me out of the market, so that none of my other markets can work for me that day. But occasionally there'll be a really nice move that I can catch. That's how I would look at that. If you were only trading this, you'd want to take a look at. Let's flip it and look at the profitability here. So 89 ticks is what we're looking at here. So here it is by profit now, so the most is 179 at 7.16. That's not bad, actually. If you were only trading the euro, all right, on 0.3 trades per day, that's why I say it's not bad, because you're not taking a bazillion trades to make this smaller amount, or the smaller amount per trade, 7.16, as opposed to what do we have up here? 9.89. Okay, so that's 7.16 trades ticks per trade. Where is our 9.89? It's down here. So what we've been doing is, where do we rank here? There's a lot of others here. This 179 is basically double what I chose, and so it's worth considering. At only 0.3 trades per day, it's the same the same logic. I'm not going to get killed in this market, which takes me out of trading all the other markets. This has the case, though, that I just discussed, where I don't like the imbalance between shorts and longs. I much prefer it when it's there's a more even number. The markets move up, and if the market's trending up, you tend to think you only want longs. If the market's trending down, you tend to think you only want shorts. What the data shows is that for any given bar, there's an equal probability it's going to go up to your first target or down to your first target from that bar. I can show you that data. It's astonishing to me. Even in what we're in the midst of this incredible bull market, multi-year-long bull market, the data is consistently the same in terms of the percentages of times that the market will go up, down, or sideways. It's 50% of the time it goes sideways, 25% it goes up, 25% it goes down to your first target. It's pretty interesting. Now, so did I decide here? This is the 6 hour. Yeah. So I decided on this. All right. So the members, you'll see this as the yellow, and I'll be putting these codes into my trader tonight. And the other thing to think about is what I didn't describe when we were discussing this earlier. So this video is getting pretty long, but this has all been about analyzing results based on simulations of predictions made by the model. Okay. What I didn't describe is, well, how did I train this model? Okay. So what I've done is, there are lots of knobs and dials I can turn on how do I train that model. And really what we're talking about is tuning the signal to noise ratio. And so the markets are a really noisy environment. There's a lot of just Brownian motion in the market, a lot of random variation, a lot of random price movement, or what appears to be random price movement. And that's a result of the fact that there's thousands upon thousands of people all trading simultaneously, all with different goals and in different situations with different mindsets. And so trying to filter out that noise is really challenging. I'm working on something much more sophisticated that's a step function level in complexity to really sort of address that problem. It's way out there in the future in terms of being ready, or even determining if it will work. But in the meantime, what I've done is I've tuned the system to really filter out the noise as much as possible, to the point where, basically, if you think about it like the old style radio knob, where you'd tune it back and forth, trying to get a good signal. I can tune both directions. I can tune to a point where I filtered out so much noise I never see a trade, or I can tune the other way, where I see a bazillion trades, but they're really just a function of this random price movement. So I've tuned it to the point where I'm filtering out along the spectrum of noise to signal. I've tuned it to filter out as much noise as I can and still get a reasonable number of signals. Okay, if I tune it any more, we'll just never get a signal at all. But this is what I've been doing to try to deal with the noisiness in the environment, and then I have in my head that going through the process I'm going through now, or tuning the signal to noise ratio as high as I have, plus this analytical process here, may get me to a point where I can apply this to something like the NASDAQ, which had been so unpredictable, so wild, so noisy that it was extremely difficult to trade for quite some time now. Okay, so that's it for today. That's a long video. Members, look for us in the weekly message. Look for a spreadsheet that looks something like this, which has my choices for what I'll be trading, and then you can make your own based upon kind of thinking through what we've discussed today. And then what we'll do is this spreadsheet will go out every week, like it has been, but it's only been my individual choice. Right now, it's going to go out every week with the entire range of choices for you to make. And so basically, this simulate using this through last Friday. Last Friday changes every week. Every week we add another week of data. We rerun our simulation. And then we look at we look at the results here until it's time to retrain the model. So about once a month or so, we retrain the model, and we shift here from 320, like end of March to end of April, and then we sort of we get more data into the model to train on, and then we use that to simulate. So this period of time here sort of expands and contracts as I should do this moves forward, and then this period here will expand and contract as we add weeks of simulation before we retrain the model. All right, okay, so that's it for today. You might find you need to watch this a couple times before it fully sinks in. Any questions, don't hesitate to send me an email, and take care.